the one man who helped build and oversee Newmont Mining's most profitable mine, is on the cusp of delivering a new cash-flowing mining company to North America. With a 70 cent a share price target from Euro Pacific Capital, this 25 cent a share company is 35% owned by one of the most successful businessmen in America.
Learn more at crushthestreet.com/wealth.
Hello everyone, and welcome into crushthestreet.com. We're here at the Silver Summit 2015. I'm here with David Morgan, actually. He's with the Morgan Report, silver-investor. We had him on the show, actually, not too long ago, but I get to see him in person. How are you doing today, David?
Doing well, thank you very much.
David, what are we seeing right now with the silver price? We saw it hit 13 a couple days ago. I don't know what it did today. The economy's volatile. Precious metals, there's a lot of demand for precious metals. It's out there. I mean, when people get scared, when people are concerned, the global uncertainty around the world, you gotta assume that people are buying precious metals, and we're not seeing the price move the way a lot of us have been expecting it to. So what are your current thoughts at the moment?
Well, my thoughts right now are just going back in very recent history. As you said, with the concerns of the global economic system, we're seeing a lot of influx in the buying in the silver market as recently as like a month ago, 2 months ago. And such demand that the premiums came up substantially on retail product. And based on a conservative estimate at the peak of it, I said there was probably about a 5 million ounce backlog. And that, of course, has subsided within the last few weeks. Due to that fact, we've seen the premiums back off, and now we've seen the silver price go from like 16 down to like 14 and even prints below that, which to me is very surprising. I thought, first of all, that there's a good chance that the premiums would back off and things would get back to normal, and we would see it maybe drop down to maybe 15. I didn't expect it to test the lows of the 14.11, 14.16, and I think 14.22 that we've seen, the low 14s, and could go lower. I mean, it's been a really tough slug, and the biggest problem, is that the price is not reflective of the tightness in the market. That's the issue that I have, is if supply-demand, free market economics works, you should see a higher price, which we saw temporarily, from the move to 15 to 16. But now to see it making new lows is not reflective of the true market.
Dave, you pointed out hyperinflation in a previous interview I was listening to, and you described it in a way that was much different than I had ever thought of it before. Hyperinflation to me was always the expansion of the money supply, and I know you're not going to disagree with that, but tell us what you meant when you 3/5.
I had Keith Weiner on from, I forget his site's name, I'll give him credit, you can Google him. Very bright guy, and we don't agree on everything, but he has some very good insights. And what he pointed out was that, first of all, these are my words, financial repression. Financial repression is where you have the zero interest rate policy, where it helps the banks and it helps the governments because they are very subject to the interest rate. So you cannot pay the interest to the private banking consortium on the national debt with taxpayer money at a high interest rate. The whole thing would blow up. So if you keep the interest rates low and repress everything and everyone so the savers can't earn a living on interest, it helps the people that borrow the most money, which are governments around the world. So that's financial repression. So Keith points out that if you look at it in a way where in better times with normalized interest rates, if you had, let's say, $1 million at interest at 10%, you'd be making $100,000 a year, and you would easily be able to live off that in a normal economy.
And you'd be able to get the 10%.
Yeah, and you could get a 10% yield. Now, for the last many, many years, you're getting next to nothing. So in order to get like a $35,000 to $50,000 a year cash flow, you would have to have something like $40 million at interest at today's interest rates in order to live a meager existence. And so that was a way to look at the hyperinflation. So for you to live off the interest rate currently prevailing in the marketplace, you need to have about $40 million saved up. Well, no average American has $40 million saved up. And so what they have to do is either keep working, spend their savings, or a combination of both.
Yeah.
I mean, a lot of the Walmart leaders, it's a joke, but it's true, are, 70, 75, whatever. I mean, they'll take any job they can get. You go to McDonald's in some places, and these, gray-haired people are behind the counter. So it's an absolute way to look at it in a very easy manner. People understand that, we really have had a hyperinflation in a sense, because you cannot live off your savings at the interest rates that's prevailing today. In order to do so, you've hyperinflated the currency to a level that you would have to have millions and millions of dollars in order to retire on a given interest rate.
What do you suspect would happen if we actually did see people saving? Would that just crumble the economy? Because isn't the economy right now based on people going out and spending and just continuing to build up this fictitious lifestyle that the government's experience, the stock market's experience? I mean, even the companies now, they're buying back their own shares. There's so much artificial growth that has happened based on low interest rates, based on people spending. What would happen if people actually started saving their money?
Well, there's nothing wrong with saving.
Right.
The only time you really don't want to save is if there's a true hyperinflation that's so obvious. Then you want to save in real things, so you turn cash that's becoming trash into jars of peanut butter, ammunition, whatever. But most times, in somewhat normal economic times, savings is a good thing. But you're right. The whole conditioning, particularly in the United States, is consume, consume, consume. The tax structure is set up to where it rewards people for spending more than they earn. You got to write off interest rates or interest paid on mortgages as an example, business dealings. So there's a lot of favoritism to overextending your credit or even within your credit structure. And the idea that 70% of the economy is due to consuming is what's published in the mainstream media. So I'll use their number. Think about that for a moment. Let's just go back to the most basic thought process that we can of a lone survivor or a very small community. Okay, let's just say a community of a few people. They build their own homes out of logs and they farm. If they consume 70% of what they produced in 1 year, and they had a crop failure the next year, then they only have 30% left, and they would not be able to survive the next year, or they get awfully skinny. Now, I do that thought experiment to point out that you cannot sustain an economy by consuming more than half of what you save forever. So it just coincides with this whole idea of this financial repression, favoring the banking system over the populace, the conditioning that's gone throughout the system that, spending is good, saving is not so good, you're not rewarded for it, you get no interest on it really, and everything's kind of upside down. I mean, the Yankee frugality that comes from the early, start of the U.S. was about, being frugal, about saving for the future, using what you have. If it breaks, if it can be repaired, repair it, and go on with it. So I just listened to an interview with Castor and Austin Fitz that was done on Greg Hunter's channel, and she made some statements I totally agree with. In fact, I agree with a lot of her stuff. And she said, look, we're wimps. She said, she quoted a guy who said, in true free market capitalism, winners have to win and losers have to lose. I used to say it a different way. I'd say, the right to succeed guarantees the right to fail as well. In a true free market, the market weeds out unproductive situations that the market doesn't want. You could actually invent something that some people think is wonderful, but the market says not enough people think it's wonderful, and you go out of business. That's free market capitalism. Yeah. That hasn't existed for a long time, and so that's one of the problems. So to repeat, she and I and many agree that we really need to get back to basics, and I think what's going to take place is some hardships across the board, regardless of how much money you have, that is going to test us in a way that we haven't been tested in a very long time. Catherine used the example of her grandmother that lived on a dirt floor with, I think, wood heat or something along those lines. It's not saying we're going back to that, but that people had more, let's say, I don't know the right word, they had enough human ability to withstand hardship with a mental and physical attitude that very few of us possess these days. And when that is tested just a little bit, people seem to cave pretty easily. And that's not what we want. One of my favorite quotes is chance favors the prepared mind, which means that if you're mentally prepared, and of course physically as well, to overcome some hardship of whatever it could be, you're much more likely to do so. But if you're always reliant on tomorrow being exactly like it is today, and something disrupts that, and that could be outside the economic system, it could be a car accident, it could be bad weather, it could be electricity going out. I just had my electricity out for about 4 days recently. Any of those things. So I don't know. I guess what I'm saying is a lot of Americans are sort of wimpy, and we used to be better than that.
It's like a short-term mindset versus a long-term prudent mindset. The immediate gratification versus doing what's best for the long term. And I mean, even debt is immediate gratification for a lower standard of living in the long term. I mean, unless you're doing something positive with that debt. And then, saving is deferring that gratification for a later time. So kind of in that same vein, and just in a wrapping up sort of way, I want to just talk about the noble fight, owning precious metals versus what that is going up against. A lot of people, they just say, what's the big deal?
Yeah.
Why care about it? If precious metals do what they do, I mean, maybe they just don't understand why precious metals are important and what gold going up does to the currencies. Why is that competition such an issue? So just what are your thoughts on that?
Well, my thoughts are that it's so radical and so outside the box thinking that about 99.9% of the population will immediately disagree. But my thought is that governments fail. And if you have money outside of government issue, you've got something that can be spent anywhere. Going back to what Gaddis says, I used to be in the aircraft industry for a short amount of time, familiar with the test pilot industry. But anyway, the point is that all of the fighter pilots have a survival kit, and the survival kit's a gold coin. Not a $100 bill, not a yuan, not a peso. It's gold. Why? Gold is spendable anywhere in the world at any time. So the idea is that governments do fail. And most of the population will just blow off that idea, especially with the government expanding. Well, government can't expand forever. Do a thought experiment. Everybody works for the government. What does that mean? They'll just print the money out and hand it out. Well, that's what's happening now anyway. So we're near a tipping point, and you have to be more self-reliant, not more dependent on the government. If that's the opposite of what's taking place, more people are becoming dependent for various reasons. Lost their job, they can't, make ends meet, and all those things. And I'm, as human as the next person, I do appreciate that, and I do have empathy. Definitely, I have compassion. But again, it's the teach a man to fish or give a man a fish. You want to get back to the teaching somebody to fish. You do not want to have to be dependent on somebody else. And that's the American dream going way back, is that we were self-reliant and government had a little place in our lives instead of government controlling our lives. That is going to flip back at some point. And that's what I want people to understand, is that my radical idea is that governments do fail. And that's where you want something outside of government control that is very recognizable as money. Gold has been for thousands of years. Silver has been for thousands of years. So as radical as it has happened throughout history, again and again and again. In the peak of the Roman Empire, no one thought that anything could go wrong. Everybody wanted to be a Roman citizen, and they didn't see the peak for what it was. When things look the most glorious or the most powerful, you may be at a top.
That's interesting thoughts right there, everyone. That's David Morgan with the Morgan Report. You can visit him at silver-investor. He's got a free newsletter and also a paid one as well, and you'll get all of his thoughts, all of his stock ideas. David, thanks so much for taking the time with me.
My pleasure. Thank you.